This video is going to help you build your personal credit and tell you everything you need to know. I had the worst habits in regards to credit, man, and you don't want to do that. So imagine you putting in all this work to be a 1% man. You done maximize your income. You got your physique right. You got the chick on your arm, the relationship with God good. You can't even get approved for a house, approved for an apartment, approved for a car. This is the easiest way to fuck up your credit. I was always told, keep your credit card under 30%. That is incorrect, fellas. You got one chick, she be going, right? She be outside, she be fucking a lot of niggas, right? And then you got the chick that's a virgin that only had a couple of boyfriends, right? That's how banks look at inquiry. Once you at this point, the world is in your hands. This is a great tool to if you're starting from scratch and you speak all the time about the gym, about women, bro. You gotta have some type of financial literacy as well, fellas. That's a part of it, right? That's a part of becoming a 1% man. YouTube, what's good? It's your boy Cry. Welcome back to another vid. Make sure to like, comment, and subscribe for the algorithm. And make sure to follow me on all platforms at I Am Cry. Today we got a great one, man. I'm gonna share with you guys everything that I wish I knew about credit in my early 20s, fellas, right? Lately, I've been speaking a lot about the financial aspect of becoming a 1% man, right? Whether it's what your savings should look like, your spending habits, cutting expenses, right? And on my last video, I spoke about the top 5 business models I recommend. And one of those business models was real estate, which is probably the most profitable in the shortest amount of time out of all the business models I went over. But within real estate, you need a lot of startup costs. You need a lot of funding. And 2 ways to leverage your funding is with your personal credit and your business credit. So this video is going to help you build your personal credit and tell you everything you need to know in regards to that. That's just one side of the coin, fellas. It gets deeper. Like a lot of this shit we talk about, the Lamborghini Uruses, the penthouses, right? All of those things, bro, you gotta have some good credit, bro. You need to have all your ducks in a row from a credit standpoint. You dig what I'm saying? So this video will really help you, man, if you kind of clueless about credit, if you know a little bit about it, right? Or even if you're an expert and you gotta tighten up on some shit, this will help you as well, right? So without further ado, man, let's get right into it. So first and foremost, what is credit? Credit basically is trust, right? Other people's money, right? So others people are loaning you money and you pay it back over time. That's basically all it is, fellas, and it's extremely important. I made a lot of mistakes with my credit early on, fellas. I was getting credit cards, maxing them out, right? Getting drinks, right? Going to parties, buying a whole bunch of clothes to go out. I had the worst habits in regards to credit, man, and you don't want to do that because there's so many ways that you can leverage it to make more money and to get nice things. A lot of times as a kid, man, you got that extra income, you got that credit card, you want to spend, spend, spend. As my dad would always tell me, it's burning a hole in your pocket. You just got to spend it, man. Don't do that, man. Be cautious, bro. You always want to be calculated with credit, man. Don't make the mistake of, oh, I got this $500 credit card, let me max it out. Or, oh, I went to Best Buy, they said I could get this credit card, let me get it and buy this fucking game system, whatever the case may be, man. Don't make those mistakes, man. Be very cautious, man, because early on, you're fresh, right? You're like the new kid at school. So everybody trying to be friends with you, right? All these credit bureaus trying to offer you this, offer you that. You got to be very careful, bro, right? Don't be reckless with your spending in regards to credit. That's a mistake I made, fellas, and I dug myself in a deep ass hole, and it took me such a long time to get out of it, man. You don't want to do that. As I mentioned before a little bit, credit is extremely important in the lifestyle that we want, fellas. I speak about getting that access to the capital for real estate, getting that access to the capital for different investments. The higher your credit score, the easier it is to get that access. We go into the luxury purchases aspect, right? If you want to get a Benz, if you want to get a BMW, if you want to get a Urus, if you want to get a penthouse, if you want to get a house, right? The down payment, the monthly payments, whatever the case may be, is all going to be determined based on your credit score. It's very important to have it extremely high. The lower it is, the harder it's going to be for you to get those things, right? So imagine you putting in all this work to be a 1% man. You done maximize your income. You got your physique right. You got the chick on your arm, the relationship with God good, your charisma good, your communication good, but you can't even put a down payment on a house, or you can't even get approved for a house, approved for an apartment, approved for a car. That's credit, bro. Another thing that's very important with credit that you must keep in mind, fellas, is lower costs, right? So you may get approved for a car, right? But you paying $2,000 a month for a car note when it could have been $1,200 a month if your credit was intact, right? So a lot of times with credit, not only are you going to get a lower payment, but you're going to get a lower interest rates on loans, which I'll dive into later on. But it's extremely important, man. Like, the higher your credit score, the more perks and opportunities you can receive versus if you have a lower credit score, it's a lot harder, right? to get these cars, to get these houses. But overall, fellas, all credit is trust. It's other people's money. They lend you money, you use it, and you pay it back. But you can leverage it in so many different ways. Next, we're gonna go into credit factors, right? So there's 4 main factors that determine your credit score, right? The first one is payment history. Payment history is about 35% of your credit score, fellas, and all this is just making your payments on time, right? So this is the easiest way to fuck up your credit, right? You want to fuck up if it was a book on how to fuck up your credit, just don't make your payments on time, fellas, right? I recommend it, whether it's your rent, your credit cards, student loans, whatever the case may be, anything that's going to affect your credit, man, if you got it, put it on auto pay, dog. For a credit card, man, make that payment early. This is the worst and easiest way to fuck up your credit, man. You don't want to miss payments. Always make your payments on time. Second biggest impact is credit utilization. And this makes up about 30% of your score, fellas. So all this is how much credit are you using, right? Banks and lenders, they don't like to see that you're using so much of your credit. It gives like, okay, this dude is higher risk. Like this dude is using a lot of his credit. Why does he need to use that much of his credit, right? It's a red flag to lenders. And growing up, I was always told, keep your credit card under 30%. That is incorrect, fellas. To maximize your score in your credit report, you always want to keep your utilization under 9%, right? So if you're going to apply for a card and you're trying to maximize your credit, make sure your utilization is under 9% at least 30 days before you apply so it reflects your credit report. So let me explain what I mean by that. Let's say I have 5 credit cards, right? And within those 5 credit cards, my credit limit with all of them accumulated together is $10,000. I don't want to spend no more with all those credit cards combined. I don't want to spend no more than $900, right? That would be 9%, right? That's going to be the way I can maximize my credit card the highest. That's the most I want to spend out of that $10,000. Now, God forbid, if an emergency happens and you need it, do what you got to do. But this is something you want to keep in mind with applying for new credit cards, with applying for a new apartment, with getting a new car. You always want to make sure that utilization is under 90%. This is the second biggest impact on your credit score, on your credit report, right? So if you're making your payments on time, right, if your utilization is under 9%, you already defeated half of the battle. Next is credit age. And this is about 15% of your score, fellas, right? And all this is how long you've had your credit, right? So if you're fresh out the womb, you don't really have a history of making a lot of payments. You don't really have a history of keeping your credit utilization under 9% because you're new to the game, right? That's something that lenders look at as well. But there is ways to finesse this. The longer you can demonstrate that you make on-time payments and that you keep your utilization low, the more trust that you have. Remember, I mentioned credit is all trust. The more that these lenders and these bankers are going to trust you. So one day to improve this, let's say I'm fresh to the game. I'm 18, bro. I got no credit history. I'm new. What you can do is you can use a friend, a family member that's a little bit older and become an authorized user on one of their credit cards, right? So this is something I did. My grandmother had an American Express for about 14 years, right? So she added me as an authorized user and it went to my credit report, right? And then since I was new and I had 0 years and she had that card for 14 years, it averaged out. So now my age was 7 years, right? So typically anything over 5 years is pretty much a good credit age, right? As long as you got 5 years of making on-time payments, having good utilization, you're good to go. Anything over 5 to 7 years, right? So when you're becoming an authorized user, you know, ask a family member, ask a friend like, hey, do you got a credit card I can be an authorized user on? They'll add you, boom. And you don't have to be authorized to spend, right? They can make you an authorized user, but not give you the physical card. So that way you're not tempted to spend and fuck up their credit and yours. But you want to be careful, fellas. Anyone that adds you as an authorized user, make sure that they have really good credit. Like my grandma had amazing credit, like over an 800 score, because anything they do can affect you as well regarding that specific account, right? So with this, you have to be careful, but you can finesse the credit age, fellas. If you don't have a family member or a friend, there's different websites. Use ChatGPT, do your research of things of trade lines you can buy to improve your credit age, right? You can also do that with utilization, right? You can, you know, purchase different trade lines and make monthly payments on maybe a credit card that gives you a $20,000 limit, right? And you just make payments on that like $100 a month, like a subscription-based model. But I'll go more into that at the end. But yeah, credit age is the third most important factor in building your credit, fellas. So it's kind of fucked up if you're new to the game. You got a bad age, but as I mentioned, there's ways to finesse it. And then as time progresses, man, credit age will get better. Lastly, we got inquiries, right? So this is about 10% of your credit score, fellas. And This is the least important, but it's still a factor. It's still very important, fellas, right? So inquiries is just how often you're applying for loans and credit cards, right? How many hard pulls you have. So I like to give the analogy. This is how banks look at it. Like, let's say you got a chick, right? And you got a chick you got one chick, she be going, right? She be outside, she be fucking a lot of niggas, right? And then you got the chick that's a virgin that only had a couple of boyfriends, right? That's how banks look at inquiries, right? So they're gonna take their chance on the girl that's either a virgin or hasn't been with a lot of men, and that's who they're gonna wanna take on a date, right? Versus the person, they done had sex with 10 niggas in a month. They like, I don't know if I wanna be outside with you, right? So that's how they look at inquiries. Why are you trying to get all this credit so fast, right? That's a red flag to banks, right? So the lower inquiries you have, the better your score will be, right? And there's two types of inquiries, fellas. You got hard pulls and soft pulls. Hard pulls are the ones that affect your credit score negatively. Every hard pull can decrease your score by 5 to 10 points. Versus a soft pull, it won't affect your credit at all. It just does a soft pull, looks at your credit, and that's how you can get pre-qualified for certain things without doing a hard pull. You want to be very strategic with applying for credit and with getting inquiries on your account, right? I recommend no more than 3 inquiries per year, right? Probably 1 in the beginning of the year, 1 in the middle of the year, 1 in the end of the year. Right? You can also do inquiry stacks, right? So if you're trying to, let's say I do real estate and I'm trying to maximize my funding, right? Let's say I'm trying to get a credit card with Chase and a credit card with American Express and a credit card with Bank of America, right? And I want all of these credit bureaus to see that I don't have a lot of inquiries. I would apply for all 3 of those the same day because it takes time for the inquiries to reflect on your account. So if I apply for all 3 of those cards on the same day, right, they're not going to see it. Right? They're not going to know, right? Because it takes time for the inquiries to reflect on your account. So that's a credit hack as well. But overall, fellas, just be wary of how often you inquire and apply for different loans, right? Like, let's say you went to try to get a car and they did a hard pull and you didn't get approved, right? And then you go to another place a month later and apply to get a car. They're going to see like you just inquired to get a car and you didn't get approved. That's a red flag. Why would we loan you the money? Right? So that's something you got to keep in mind as well. But always speak with the lenders, fellas. Speak to these lenders like they people. Like before they do a hard pull, always ask, can you see if I'm pre-qualified? Right? So that's when they'll do the soft pull and just look at the basic information of your credit report and they'll basically make an estimate on if you'll get approved with the hard pull, right? Because you don't want to have all these hard pulls, all these hard inquiries on your account and not getting approved because that's fucking up your credit. Like imagine applying for the Amex, the Bank of America, and the Chase and you don't get approved for none of them, right? Then you just got 3 hard inquiries on your account and you don't even got the funds because you wasn't approved. Right? So make sure you ask them, am I pre-qualified? Or look for something on the site to see if they do pre-qualifications, right? That's an easy way to kind of increase the chances from a comfortability standpoint of, okay, this is something I'm likely to get approved for. Let me do a hard pull. Does that make sense? Next, we're going to go into credit mix. So credit mix is basically, fellas, just the different types of credit that you can have reflective on your account. So I'll give you an example of how these lenders look at credit mix and why it's important, right? I think about it from a basketball standpoint. Like if you look at the draft, the 03 draft, right? LeBron was drafted number 1. LeBron and Melo were probably the top prospects in that draft, right? But you had Melo, he was one-dimensional, right? He could score really, 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 really good, right? But then you had LeBron, he could score. He was more athletic. He could pass, right? So he had a diverse skill set. He had a mixture of things that he could do, right? So that built trust with GMs, that built trust with owners, that made them want to draft him number 1. That's the same thing with credit mix, right? If they look at your account and you're only paying your on-time payments on credit cards, you haven't opened up any loans, you don't have any car loans, they're going to be a little iffy. They're going to be like, oh, he hasn't been battle tested yet. Right? But if on your credit account, you making on-time payments on personal loans, student loans, credit cards, mortgages, they're going to be like, oh shit, like this nigga, he can pay on time with almost anything, right? So they're more likely to lend to you. Does that make sense? So I'd love to go over the credit types that can affect your account. First, of course, you got your credit cards, you got your American Expresses, right? You got your Capital Ones, right? That you just make on-time payments for. That can affect your credit mix. Then you got installment loans. So this would just be like if you go to lease a car, right? Making all your on-time payments for the lease payment for your car. Then you got a credit builder loan, right? Which is when you take out a loan to make on-time payments just to build your credit. And then you got like a store card or a gas card, right? As I mentioned before, you go to Best Buy, they give you a credit card that you can spend at Best Buy, or you can use a gas card and make all your gas purchases on it and then pay it off at the end of the month. Those are basically the 4 major types that can be included in your credit mix. So a bad credit mix, fellas, would just be if you had 1 credit card. A good credit card mix would be if you make an on-time payments on a credit card and on-time payments on a car note. Perfect credit mix would be you making on-time payments on a credit card, on-time payments on a car note, on-time payments on a mortgage, and on-time payments on the student loans, right? As I mentioned before, they're gonna be like, God damn, like this nigga can keep his utilization low and make on-time payments with all these variations of credit. This is a guy we can trust. Let's loan this guy some money, right? That's how they look at it. Next, we're gonna go into credit scores. So an easy way to look at credit scores, man, and the cardinal rule for credit scores is the higher your credit score, the easier it is to get approved and the more money that you save, right? The lower your credit score, the harder it's gonna be to get approved and the more you're gonna spend on interest rates, right? That's a very simple way to look at credit scores. So I love to break down the ranges, 300 to 579. This would be a poor credit score. And with this credit score, you're gonna struggle to get approved or you're gonna get really high interest rates. What do I mean by that? Let's say you need $5,000, right, a loan and you just make monthly payments on the loan. You're probably gonna, overall at the end of the loan, you're probably gonna end up paying $8,000, right? Because of the interest, the monthly interest on your payment, right? Versus if you have really good credit and you need $5,000, you may only pay an interest of $50 at the end of the loan. Does that make sense? 580 to 669. This will be fair credit. You can go get a car with this credit. You can go get an apartment with this credit, but you're not gonna get the best deals. You may have to make the maximum deposit on that apartment. You may have to pay a really high down payment on that car with this credit, right? 670 to 739. This is good credit, fellas, right? This is a great place to be, right? You pretty much can get approved for anything. Your interest rates are gonna be low, right? You can get any credit card that you want most of the time. This is a very good place to be in. This is really the bare minimum of where you wanna be, fellas. So at the very minimum, to maximize your life and live a certain lifestyle and make sure all your ducks is in a row, I recommend a 670 credit score at the very least. Next is 740 to 799. So this is great credit, man. This is great credit. You can wake up tomorrow, go to a bank and say, hey, I need $100,000 to invest in real estate. 9 times out of 10, they're gonna give it to you with this credit. 9 times out of 10, when you got this score, fellas, people are gonna be begging to loan you money. They'd be like, hey, we got 200K for you. Do you need it? Right? With this deal, man, you're always gonna get the lowest possible payment on anything. Your interest rate is gonna be extremely low with this score. This is a great score to have, and this should be a goal. This should be what you're shooting for long term, right? 740 plus. Lastly, we got 800 to 850, man. This is where my grandma was, man. This is exceptional credit, right? Now, this takes some time to build, fellas, to get to this point, but once you're at this point, the world is in your hands. Anything you want, you can get. Any money amount, any loan, whatever car payment, everything is negotiable at this point, right? But this takes years and years of being consistent with your credit factors to get to this point, fellas. But I say best case scenario, if you're starting from 0, your credit score is 300, you can get to an 800 in 2 to 3 years. I say 2 years, you can get to an 800, but you gotta be consistent with those habits. Your inquiries can't be high. Your utilization can't be high. Your payments gotta be on time. You gotta have a credit mix. Right? You got to have a high credit age. As the year progresses, maybe you got a high credit age. Maybe you went and got an authorized user. Maybe your credit age is 15 years and it's really only supposed to be 2 years. Right? So those are things to keep in mind, but this is what you want to get to, fellas. Next, we're going to go into credit types. This is a major key of something I did not know when I was coming up, right? So with credit, fellas, there's 3 major bureaus, right? First, we'll start with Experian. Experian is the credit bureau that's pretty much used for credit cards and cars, right? So if you're applying for an American Express, if you're applying to get a Bentley, they're most likely gonna look at your Experian score, right? TransUnion is the second bureau. TransUnion, some credit cards will look at TransUnion, but most of the time TransUnion is gonna be for personal loans, right? So if you just need a personal loan because you in a hard spot or you need a personal loan to buy some furniture, you just moved into a crib, they're most likely gonna look at your TransUnion score. The last bureau is Equifax. Equifax, lenders look at Equifax most of the time for mortgages, right? So if you're applying for a home or an investment property or you do real estate, like in that realm, they're most likely gonna look at your Equifax score. There's 3 bureaus, but there's 2 types of scores, right? So you got your Vantage score and you got your FICO score, right? The Vantage score is what you would see on apps like Credit Karma, and then your FICO score is what you would see on the FICO app or in apps like Expedia or more upper echelon credit management accounts, right? Your FICO score is more important than your Vantage score. Your Vantage score will always be higher than your FICO score, man. So take it with a grain of salt. Most lenders, whether it's a car, an apartment, a house, they're going to look at your FICO score. They're very rarely going to look at your Vantage score. Even with most credit cards, they're looking at your FICO score, right? Within one of those 3 bureaus. They're not looking at your Vantage score. So really take your Vantage score with a grain of salt. Yes, some lenders look at it, but 9 times out of 10, fellas, they're looking at that FICO score, right? So ignore the shit that you see on Credit Karma because it doesn't really matter. Right? If you want to look at your FICO score, man, I recommend downloading the Expedia app. It's $30 a month, and they'll tell you your score with Equifax, TransUnion, and Experian. Okay, Cry, you done told me everything I need to know. How can I build my credit, right? So let's go into some easy ways to build your credit, fellas. The first way I recommend, fellas, is to invest in Lexington Law, right? This is a company that I used before. It's a credit repair service that helps you clean up your credit, right? So gets rid of all those inquiries, gets rid of those delinquent accounts, right? Gets rid of those soft pulls, the hard pulls, right? Anything that's inaccurate on your credit account, they're getting rid of, fellas, which is very important. They basically review your credit report and dispute anything that is inaccurate, right? I used Lexington Law for about 6 to 9 months, and my score went up about 200 points, right? I believe I went from at the time I was at 480, I went to a 660 to 680. It helped me get out of the hole, fellas. It helped my credit score tremendously, right? But one thing to keep in mind, fellas, this is a little pricey. I believe it's about, depending on what service you get, it's about $89 to $150 a month. So it's a little pricey. Make sure your money is good before investing in it. But again, it's gonna be worth it, fellas. Think about, okay, I spent $100 a month I spent $600 between month 1 and month 6 to improve my credit. But at month 6, think about all the funding and access you have, right? So it's just like you making an investment for a future, right? You spending $600 to get yourself $10,000 of funding for the future, or save yourself $10,000 on interest rates in the future, right? So this is definitely something you want to invest in. Another app that helped me build my credit is an app called Self, right? Self is an app that helps you build your credit while saving money, right? Or while creating you a credit card, right? So what it does is you just choose what amount you want to pay monthly, right? It could be $15, it could be $30, it could be $100, right? And it's going to report those on-time payments to your credit account. This is great if you got no credit cards, right? And as you're paying it off, it's going into your savings. And then once you get to a certain amount, they'll give you an offer and say, hey, do you want to open up a credit card, right? So let's say you made $100 payments for 10 months, you got an $1,000 credit limit. You dig what I'm saying? Not only are you adding a credit card to your account to increase your utilization, right? But you have all those monthly payments, and every 3 months they assess your monthly payments and your payment history, and it's gonna boost your score up, right? So this is a great tool to, if you're starting from scratch and you need some type of payment history and you need some type of credit card, I recommend Self. I also recommend Kickoff. One thing I love about Kickoff is great for your utilization, right? So how Kickoff works is they'll already give you in $1,000 credit card, right? And the utilization will be already at $100, right? So you're just making $5 a month payments on that $100, right? So again, it's almost doing the same thing as Self, but it automatically is giving you the utilization, right? That's one thing I love about Kickoff, right? So I would recommend Self, Kickoff, and Lexington Law. But again, do your research, man. Look at different companies, man. There's a lot of great companies. There's a lot of great tools that you can use to build your credit, fellas, right? And credit is extremely important. I wish I knew these in my 20s. I was being dumb. I was swiping that motherfucker, buying whole shit that they wasn't supposed to have, buying myself shit I wasn't supposed to have, blowing money on food when I had food at home, making impulsive purchases. Bro, you don't want to do that. You want to be smart. You want to leverage that money to make more money, right? I speak all the time about the gym, about women, bro. You got to have some type of financial literacy as well, fellas. That's a part of it, right? That's a part of becoming a 1% man. And this is all things I wish that I knew were important. But again, man, you should at least be shooting for that 670 credit score, right? That's the bare minimum to be able to get the lowest payments and get anything you want, right? Bare minimum, 670, fellas. So shoot for that, man. But that's the video for today, man. I love y'all. Peace.